Okay, awesome, guys. So tonight we are going to be talking about balance sheets. So this is something that comes up a lot, or sometimes that doesn't come up at all, and people don't understand they're missing this part of the equation with personal finance. So I think that there's a few things that everyone needs for personal finances. I think one's obviously the budget. That's a no-brainer. But the other document that I think everybody needs is a balance sheet. And so why is that? We'll talk about what exactly a balance sheet is, how to use one, and I'm going to give you guys a free copy of this tonight so that you guys can use it yourself. All right, so first things first, what is a balance sheet? And feel free, guys, to drop questions in the chat box as I'm talking, and I'll get to those questions as I'm done. And then also we can open up for Q&A at the end of the presentation so that you guys can ask me anything. So don't be shy. Feel free to ask questions. So, all right, so what's a balance sheet, guys? A balance sheet is going to list all of your assets, what you own, literally what you own. So technically, everything that you own, whether that be something you're leasing or financing, you have a loan on, you still technically have ownership of that, even though it might have a liability associated with it. So that is where the other side of the equation comes in. The liability is what you owe at any given point in time. And so the difference of that is your net worth. It's as simple as that. It's a very simple equation. There is no complicated algebra or high level math here. It's plus what you own minus what you owe. That gives you your net worth. And so that's one of the most powerful numbers associated with anybody. And I think a lot of times people want to say, hey, how much income do I make per year? How wealthy are you? Or I'll hear, oh, he's a millionaire, he must make $1 million a year. That's not the case. A millionaire is basically when your assets minus your liabilities equal $1 million. So if you have $2 million in rental properties and $1 million in a loan for those rental properties, the difference of that is still $1 million. So you're still a millionaire in that situation. So in order to calculate the net worth, that is the equation, assets minus liabilities. And if you're a CPA, you might know it as equity as the difference as well. You can also use that term as well. But this is going to include a lot of different accounts, cash accounts, investment accounts, HSAs, cars, homes, properties, cryptocurrency, etc. Like lots of different things. But specifically for car and home, and we'll break this down here soon, the value if sold on these assets, or they're technically assets. I know cars go down in value, but they're technically an asset, right? So if you buy a car for $50,000, that asset or that car is considered an asset, and the value of that car, if you sold that today, would be listed as an asset. The liability on that, what you owe on that car, is considered a liability, and therefore the difference between that is your equity in the car. So a lot of times you guys hear, hey, that car is underwater. What they mean by that is saying, hey, I bought a car for $50,000 and I can now only sell it for $40,000 because the value took a hit right off the lot because I bought a brand new car, but I still owe $50,000 on the car. So therefore my net worth with that specifically is negative 10,000 in that position. So that's where you're hearing like underwater. But same thing for rental properties or mortgages in general. The value of that house or property that you have is considered an asset. So if you have a $500,000 property with a $250,000 liability on it, your $500,000 is listed as an asset and your liability is listed as the $250,000. So your difference is that $250,000, and $250,000 would be the portion allocated to your net worth per se. So that's just a little high level stuff. Let me break it down and let's get into some more detail. So this is a document I created. Technically, you guys could create this on scratch paper or anything literally. But this is just an easy way to follow it. So you kind of put your, this is typically done by every single business. So I used to do the audits of, at Deloitte. So Fortune 500 companies, I would do their audits and we would look at their financial statements, right? That's what we audited, their financial statements. Every company in the world has a balance sheet. It shows them their position at any given time, their worth. Same thing goes to the individual. They typically are going to record this on a quarterly basis. So you don't have to be updating this every single week or whatever, like you would a budget, or every month. You can absolutely, because it's a point in time. So where your budget is like your income minus your expenses throughout the month, this is the value of something at a point in time. So a lot of companies and individuals update this on a quarterly basis, but it can be done whenever. Just whatever day that is, go check the values of all these accounts. That's how you can figure out your net worth. So I put some examples, really good examples down here that are very common. This is not everything that could be listed here, but it's the bulk of most things, I would say, for most people. So number one is cash. So when I have a client one-on-one and I say, hey, fill out a balance sheet, fill out a budget for me, I want to see your current position, they will hardly ever send me their checking account, their savings account. They might send me like a savings account, but they hardly ever say checking. Your checking account is absolutely an asset. If you declared bankruptcy, the courts would declare that is an asset and they would confiscate that, right? So your checking account is absolutely an asset. So that's number one. That's the most simplest of assets is your cash, whether that be a checking account, savings account, a certificate of deposit, a money market account, any cash or cash equivalent, essentially. I also have here business bank because technically that business bank is your personal money. Like my business bank will be siphoned technically into my personal account at some point in time. And so I always add that as well. Cryptocurrency is a big one that has been recently added in on my balance sheet personally and many balance sheets. So like, for example, if you were to list your cryptocurrency, you would list it out. You could list it out by individual coin or whatever you guys may have on hand, just to make it very simple and organize your balance sheet. And then you can kind of good ways to do this is breaking it down granular so you can see all the summarized totals, but also that granular detail. If you want to move around a position, you can calculate percentages, all that kind of stuff. It just helps in the that process. Health savings account. Some people have this. I actually have a good YouTube video on this, guys. If you guys aren't following me on YouTube, go subscribe. But my very first YouTube video that was released like last week or a couple weeks ago was on HSAs. So this is a big piece of this. And we have HSAs, but what is an HSA? It's a health savings account. But within that account, you can have cash and you can also have investments. So what we have is it broken out. We have our cash portion for medical bills if needed. They require typically $1,000 to $2,000. Most HSAs do, but they also have the investing portion. So that's what I have broken out here for Jake and Kara, just as an example, is the health savings account cash portion, and then the index fund portion for Jake, and then also Kara as well. Over here on the far right, I have like location. So where these assets are housed is very helpful when you're going to update this. Now, eventually you'll get the hang of it and you'll be like, okay, boom, this, I obviously know this is a PNC Bank, it's my cash account. But if you have a bunch of cash accounts or you have a bunch of cryptocurrency wallets, you know what I mean? There's a lot of, it could be all over the place. So it's an easy way to organize yourself as well and to know where everything's at any given time. You can go find it. Or if your spouse is hey, like, I'm out of town or whatever, and your spouse needs to look something up, they know exactly where it's at because you have the location listed. So I would always list the location as well. I think it's very helpful. All right, so taxable brokerage account. This is non-retirement assets. So on my personal balance sheet, I have a taxable brokerage account under the non-retirement portion. I also have a private equity deal I just did. So between the two, it's really non-retirement. I say taxable brokerage here because that's the most common non-retirement form. If you guys open like a trading account or you're on TD Ameritrade or whatever that may be, it's pretty much most non-retirement assets are just brokerage accounts. But I also have personally like a private equity type deal. So there's a lot of different options you can have here, but I left taxable brokerages. That's the most common. Then you have your retirement accounts, your basic, that's what most people think when they think net worth is just like the retirement accounts, although they don't realize it's all of this stuff plus this. Now, this could be Roth IRAs, 401ks, 403bs, 457bs. As you see here, it's like Roth IRA for Kara and Jake. So if you guys are married, I would also include both spouses on this, every single aspect of this. My wife and I have joint accounts for most things. Besides like an HSA, we just have two separate accounts. Her IRA is obviously separate than mine, but most of them are like brokerage account joint. But if you have them separated, just list them out separate. ESOP, maybe an employee stock ownership plan, maybe a pension plan, something like that would be located under retirement. Any asset that you can't touch until 59 and a half should be in this section. Child assets. So this is kind of, I guess you could say a little kind of up in the air of how people regard this, because college savings plans are for your child. So like you technically aren't going to have those assets under your name. But the way I look at it is if you at the end of the 18 years, you're like, hey, my kid's not going to go to college, I want to go back to school. You can change your 529, the social security number to your name or any other like future grandkids. So technically you could cash that out if you wanted, take some penalties. So I typically put the college savings 529 here. Also the parent taxable brokerage for a baby is a big deal. So we have a brokerage account for my daughter, but it's in our name. So it's really our account and we can gift it to her at a later date. So we earmark it for her. It's obviously for her, but if things hit the fan, it would be a security fund for us, obviously, at that point in time. So that's where I have some child assets here listed. You can or cannot do it. It's up to you. Now, vehicles in real estate, these are kind of ones I talked about briefly earlier, is like the value of your car, if you sold, would be your asset. So that's what you list here. So if your asset, let's say you're driving a $20,000 car that you just purchased, right? $20,000 is right there, okay? Now, if you have an outstanding, if you own the car outright, it's just $20,000 and that's all. If you own, or if you have a loan for $10,000 on top of that, you would go down to the liability section and go to vehicles, and car number one would have $10,000. And as you see, this calculates your net worth at -10 based on what we just entered, because 20 minus 10, simple math, is $10,000. So that's what I have here. And then hold on, let me zero that out. That's for cars. Okay, same thing for real estate. If you guys have a rental property or you guys have personal residence or maybe land or something like that, your asset value if sold would be your asset. And then obviously your liability would be your outstanding loan. So that will total your assets. So if I was to put like, let's say put like $500 in here, 25, let's say 3,500 in there, 105,000 there. I'm just throwing some numbers out there just to kind of show you guys the calculations below. 1,000 there. Okay, and I have maybe 10,000 there. Okay, so that's going to show you your assets right here, and that's going to sum total that for you into $119,000. Over here, or I'll wait to touch on that. So $119,000 is your total assets. Okay, so that is the beginning stage of your net worth. But now you get on here and you're like, okay, well, I still have some liabilities on the books. So let's make sure we account for this so I know my true net worth here. So maybe you have credit card balance of $500. Let's hope not. Let's get rid of that if you do. ASAP, maybe we have some student loan on hand. $30,000. That's very common. I had 40,000 when I graduated. So 30,000 right there. Maybe you have some medical debt. You just got an x-ray or something like that. Maybe $250, but medical debt's a big one. And it's also one of the biggest liabilities a lot of people have on their balance sheets. So be careful with that. Hopefully you have an HSA in place to kind of take care of that, or maybe even an FSA at that point. And then your liabilities on your vehicles as well as your cars, your vehicles as well as your rental real estate or personal lot or land. So let's just say our real rental property was worth $350,000. I put that as an asset. And then down here, we had a $150,000 liability. The difference of that is, if I can do simple math, 200,000, right? So your total liabilities are going to equal 180,000. And now you're going to take the difference. It's as simple as that, plus minus, right? So $469,000 in assets minus 180,000 is 289,000. Wow, mind blowing, I know. That's how you get to your net worth. So as long as you understand the asset, what's the asset, what truly is an asset, and what truly is a liability, and then how to actually account for that, that's a big piece of this. There's a lot of question marks when there comes what's an asset, what's not. I've had people say, hey, is my furniture in my house an asset? The short answer is yes. The long answer is I would not waste my time putting your clothes, putting your furniture and little things around the house into this equation. Now, if you have like a painting or like an NFT or something like that, or like some art that actually has legit value you could sell in a heartbeat, possibly I would add that, right? If it's a collectible of some sort, maybe, I don't know, baseball cards or whatever. But if you have like a dresser, like I want to go put $100 on for that dresser. Like no one's going to buy that dresser. Like, well, they could, but you get my point. It's not really showing you your true worth, your net worth. So those are the questions I typically get. Maybe another one I get is how to value a pension plan, because not many pension plans are still around, if I'm being honest, but some people do get pensions. Like I actually have a pension. through my old company. So that's going to be sent to me. Now it's a cash value pension. So I know how much money I get when I get that money. But for somebody, hey, I get a pension. It's the average of my salaries on my 3 highest career years or something like that. What I would do for that is probably average out your 3 to date. That's just how I would do it. It's a conservative measure, but basically saying, hey, I've been paid out, 100,000 in the last 3 years. The average of my 3, let's say, is 100,000 as well. That's what I'm going to get paid during retirement. And you could value it that way. And let's say they pay it for 10 years. You could do that times 15 or 10 years or whatever. But depending, you got to figure out how that pension is calculated. It just depends how they calculate it and how I would kind of equate that into the balance sheet. But everything else is pretty straightforward. I would say it's like literally if I logged into my bank account today, it said $1,000, it would have $1,000. Same thing with Bitcoin, health savings account, brokerage accounts, any retirement accounts besides like pension. ESOP's a little different. So my wife gets an ESOP. That's an employee stock ownership plan, but that updates like every year. So basically it's based on the company's stock. So it's free. We don't do anything for it, but they basically say, hey, the company's done well. Their private whatever ownership has gone to X value. And we just say that's what it's worth at that given time. Actually one other thing, 401k specifically, or vested, any retirement assets that are vested. So like you might have to work for a company 3 years to be fully vested, they might say. So that's how it worked at Deloitte, I know. So when I was there, they said, we're going to match your contributions in your 401k. So a portion of that was being invested as I was working there. But if I left that job at any time before those 3 years, they would basically take that money back because I'm not fully vested. So to understand that if, hey, throughout those first 3 years that I'm not fully vested, I'm not going to count my blessings before I actually work there for 3 years. So I'm going to go into my 401k account and see what their contributions are and deduct that from my total balance until I actually am 100% guaranteed that. Same thing with my wife's ESOP. She had to work for 5 years before she was fully vested. And so when we were in year 4, we were 80% vested. So we would take the total balance times 80%. She would get 20% each year. And same thing with like year 3, we would do 60% of that total balance because we knew we would only get that through year 3. But now since she's been there past 5 years, she gets 100% of that balance. So that's good to know. Let's see what else. I'm trying to think of what other common questions I get on this. Most times when I get these balance sheets or budgets back, it's really just like a lack of putting information in. It's kind of like, oh, I didn't know my cash account counted, or I didn't know my medical debt counted. Like if you guys can think of it logically and you're like, hey, I owe this amount or I own this, it's going to be on the balance sheet for the most part. Just think through it generally like that. I also got a question one time is saying, hey, my medical debt's paid through my HSA. So I don't see it. It doesn't come out of or it comes out of my paycheck before I even see it. It's still a liability to you, whether it comes out on your paycheck or not. If you have a paycheck that's paying something, a liability automatically before you even see it, it's still considered a liability, because if that paycheck went away, who's on the hook? It would be you. So always realize that whatever outstanding liability you have, whether it's automated or whatnot, you still owe that at the end of the day. Rentals, for example, 150,000 for that loan. Even if you have a tenant paying down that mortgage, if that tenant walks away, you're still on the hook. So the loan is signed to your name, and you have to realize to put that there. So that is the balance sheet in a nutshell, guys. I also have a net worth calculation for you guys over here that just sums up all of these boxes for you. So if you guys change anything over here, which you likely will, you'll have to update this, but this is really just taking the sum total of everything and showing you what you have here in totality. So like cash, that's pulling 1,000 from over here or whatever. That's going to sum up, and it's just going to show your net worth kind of more summarized version versus the detail. So you kind of have both versions, best of both worlds. I usually update mine, if I'm being honest, every week, but sometimes I do every 2 weeks or whatever. By no means, like I said, you have to do that. You guys could do that on a monthly or quarterly basis or semi-annually. Like, it doesn't really matter ultimately that much. It's really just your personal statement. How I use it personally is to analyze my allocations. So I have a few spreadsheets, of course, I'm a CPA, but I have a spreadsheet that does my actual allocations for my investment accounts, like the actual positions I'm in within those investment accounts, like, let's say 65% VT-Sax. But then I also have like an overall like calculation of my net worth and like allocations here. So I'm going to say like, okay, if I'm looking at this and I'm like, how do I improve my situation? So remember, a balance sheet is a snapshot in time. So we're trying to improve our snapshot at all times. Like that's what we're ultimately trying to do. Why are we investing? Why are we budgeting? Why are we doing all these things? It's to improve where we sit financially. And this is the true statement that people care about. Like if you're an investor, a accredited investor, they will ask you for your balance sheet. So you'll have to provide this to them. Now it's going to be a lot more fancier and maybe done by a CPA, but you'll have to provide this stuff to be proven that you're an accredited investor or whatnot. So here, like you have cash and you have these allocations and you'll see these sum totals and you're like, hey, well, me personally, I have $3,000 in cash. I posted publicly about that the other day. I don't keep any cash on hand at all. But the other day I had 5,000 and I was trying to think about how can I take it down to 3,000 or lower. And I was calculating my cash and I was like, you know what, that percentage as a total. So I'd be like, 5,000 divided by the sum total of all of these right here of my assets is in this situation, like 1%. So I'm good there. I don't want a lot of cash. I want 1%. I know the wealthy don't have a lot of cash. It's pointless. So I'm like, okay, my target goal here is 1%. So if I'm like in this situation, I'm like, okay, 1.06, whatever, that's good. But if I'm like looking at this and let's say I add an asset here of like, let's say ESOP of $200,000 and my assets look a lot bigger now. And now it's only 0.74%. Then I'm like, you know what? I'm going to bulk this up just a little, safety net to 1%. How am I going to get there? Okay, let's see what 7,500 is. It's 75,000, 7,500. Okay, I'm at 1.11, maybe bring it down to 7,000, puts me at 1.04%. And I can kind of target my allocations a little better. It gets really, really good when you're talking crypto or retirement or non-retirement assets. You're like, hey, my crypto allocation, I want that to be 5% of my total net worth or my total assets. That's where you can target that. Like, I don't want to go too heavy into crypto, or I do want to go heavier. I want to go 20% or whatnot. This is where you kind of do those calculations. But unless you have all of your assets listed here and all of your liabilities listed here, it's impossible to finagle that. And that's very important. That's why I also do an Excel tracker for my actual positions themselves. So I can kind of tweak my allocations. If I'm like, okay, I'm a little top heavy in the US markets, I want to get some international exposure. I can just look at my allocations because they're already on paper and I can easily tweak that very, very quickly. So that's also where the balance sheet comes into play. It's not only to, if there's any like application or loan or whatnot, and they ask for a personal balance sheet or accredited investor type deal, it could be just for your personal use, which is what I use it mostly for. No one's ever asked me for a balance sheet at this point in time, but like, it's also a goal. Also, I think it's always cool to know when you're a millionaire, like an official millionaire. So like, that's just a cool feat. I'm not saying it's like the end all be all. There's way more past that, but like just to hit that millionaire status is a big deal. So if you know exactly when you become a millionaire, that's pretty cool to celebrate and stuff like that. So hit different mile markers. You can set certain goals. And another cool thing is like, hey, if you're like, hey, my retirement assets are at 308,000 right now. I want those to be by the end of the month, or sorry, by the end of this year at 350,000. Well, I can say 350 minus 308 is 41,500. If I have that divided by 12 years without any growth at all, like there's going to hopefully be growth, but there could be a drawback. You never know. I need to put in 34.58 per month to hit that 41,500 contribution, assuming no growth. So little things like that will be really cool to track, and you can just get the more granular you are and the more detailed you are, the more accurate you are, like anything. So it's always very helpful with that. Like that's what I typically look at it. I say, hey, my retirement's at X. I want to get to X. So I need to put in this much. That just helps me hit my goals. Then you go to the budget and then you figure out, hey, I want to contribute $3,400 or whatever that number may be. It's probably not going to be that big, but maybe my goal is 320,000. So it's only 11,500. So 958 per month. And then I go find in my budget room to contribute that 958. And that's where the overlap between the two statements come into play, is once you have your goals set on your balance sheet, you can now go to your budget and then allocate the money to it. And that's where I always say is the value of the balance sheet, is when you bring them together for the budget and the balance sheet, and you actually use those together effectively. That's where the real value lies, because you can start to really, really detail out your financial plan and make it work for you. And you'll see a lot of success. It's exactly what I did. It's exactly everything I've done to date is through using these two statements together congruently. So the budget and the balance sheet always effectively work together. Think about it this way. If you guys have, I'm just going to throw out some random expenses real fast. So like, let's say rent of 1,000, food of 500, and like car gas, I don't know, car and gas 250, right? And you have $2,000 in annual or monthly income, right? And you just do a quick calculation. You're like, all right, I have $2,000 minus 1,000 minus 500 minus 250. I have $250 left over. Where am I going to allocate that money now that I figured out my budget is these three items right here? Obviously, it's going to be a lot more complicated, but now since I figured out my budget, could I decrease any of these to increase the bottom line of 250? Should I actually allocate? I'm planning a move to a higher cost of living area. This 250 might need to go to this expense and make it 1,250, and then I have zero left over. But you can start to game plan. And so whatever this bottom number is, you can take that towards your goals. So your goals might be built in above right here, right? So it could be, hey, my investment account of $500 or my taxable brokerage of 250. And those goals could be built in. But the idea is to take this bottom number, move it back up here and say, okay, well, I want this brokerage account of 250 right here. I want to turn it to 500. So now I have a zero-based budget, right? Zero at the bottom, but I've allocated this goal up here because this is going straight to my brokerage account, because that's going to hit my balance sheet goal. So when you bring these effectively together, the sky is the limit. I'm telling you this right now for a fact. And then obviously the other statement would be on top of that would be like amortization schedules if you're paying down debts and you're trying to aggressively pay off debts. But that's if you're paying off debts and you aggressively want to, or just in general, you can actually map out exactly each month to the penny how much that comes out. You bring all those three things together and it's a gold mine. That's how I built my wealth. That's how I continue to build my wealth, because I have detail in front of me. If I didn't have these things, I wouldn't know what strategically next to do. That's where people lose, is they don't keep track of this stuff and they think they can just remember off the top of the head, and they can't. And then they're like, okay, I have $200 to my name extra this month. Where should I put it? Well, I don't even know. Okay, well, let's just throw it to the brokerage. Well, what if your crypto allocation was really low and you want to get that higher? You're not going to know that off the top of your head unless you have these numbers broken out. And so that's where that analysis comes into play. Don't get paralysis analysis. Like, don't go crazy. Like if you see 1.06%, like you're good, like you can show you're at 1%. But like if you're at like 25% in cash and you're like, hey, shit, I need to get that down to 5, like that's a big deal. But it doesn't have to be to the percent like exact, but throw some ranges out there for your goals and stuff like that, and you will see massive success. I'm telling you that right now. This is my secret, guys. Like everyone always is like, hey, how do you build this wealth? It's like, I do basic shit over and over and over and over until the crows come home, and that's how I do it. Like there's no secret to it. All right. So I've done enough talking. Does anybody have questions for me? I'm just going to not save this and I'm going to put this in there for you guys. So you guys can have this. Does anybody have questions? Let me see if there's any in the chat box. I don't see anything in the chat box. Anything, guy? Go ahead, Ariel.
Hey, really appreciate. I just joined World Squad about a week and a half ago.
Mm-hmm.
So I'm super excited, and I really like what you shared here. I do something similar on Google Sheets with my fiance. Now I wanted to get your perspective on this. We take the average of the last 3 months and then we forecast for the next 2 months.
Mm-hmm.
And the reason we do this is because our kids are growing, and every time clothes and like different activities varies. What's your perspective on like taking the last 3 months average on each category and then forecasting to the future? And we do this for everything, right? I wanted to get your perspective.
Is that you're referring to the budget, right?
Yeah. This is to the budget and also for like allocation in investments.
Gotcha. Yes, that's actually a really good idea. So I don't have kids. I have one kid. She's only 2.5 months, 3 months. So I haven't had to do that necessarily. But if I were to do it, I would really apply what I do for every budget, similarly to this. So when I start my budget, right, we look at the past 3 months. So that's a great starting point. That's really what I do. But as I grow with my budget, so the very first, like if any of you guys have taken my course before, my budget financial freedom course, you guys will know the very first thing I say, go look at the previous 3 months of bank statements and get the averages of those. And that's a starting point for you. But once you have more context in your side, maybe a year's worth of data or 3 months, like you said, worth of data, any of that's really good. And then obviously projecting, you're saying, hey, somebody else's or my, child number 2 is now 3 years old. They're going to need X, Y, and Z. Let's project that out. I think that's an excellent way. So the short answer is yes. But the long answer is that, and plus just using more and more data at your disposal. With time, it gets better and better and more accurate.
Awesome. Thanks.
Mm-hmm. I think I saw other people raising their hands. So, Guru.
Hey, thanks for all this information. This is very helpful. I got a question regarding life insurance. Does that go anywhere on here at all?
Yeah. No, not on the balance sheet.
No. Okay.
No, nope. So that's a good question. Actually, I'm gonna send you this YouTube link. I actually just posted a YouTube video today on specifically life insurance, literally today. So that's a good one. I don't know how to copy this.
I watched that just
Oh,
today.
you did? Okay, cool. I'll leave it at that.
Yeah.
It's not really an asset, right? So like, I hate to say it, but it's only there if you pass away. So it's really not an asset until it becomes an asset in a sense. So I don't include it because if you guys are living and breathing and everything's healthy and good, you're not going to receive that money, and it's just an expense at that point. And if I got $1 million in a life insurance policy, do I call myself a millionaire because I have that? No. Now, would my wife receive that if I passed away? Yes. So I would not add that.
Okay. Thank you.
Yep. I think I saw another hand, but I don't see it in here. If anybody else needs a shout out, you can. Do I have a tool for daily expenditures? Yeah, so I have a free budget, guys. I can pull that free budget for my actually, I think I might have it here. So I have a free budget template. Here it is right here. All right, so that's a free budget tool. I think that's the right link. Let's see. Should pop up this. Yep. That's my free budget template. And then I also have the free balance sheet. So you guys have both those free tools at your disposal. I will say I have a course that's going to be a lot more detailed than both of those things that you received. That not only explains this all in detail, but it's more comprehensive with the obviously free versus paid version, obviously. That is on a Cyber Monday sale tonight only to 12 o'clock Eastern Standard Time. So like 3 hours. That's Budget to Financial Freedom. I need to update that link in my bio. I don't even think I've done it yet, but that's available as well. It's only going to be $69 for the entire course, which is a steal and a half, but that's available if anybody's interested in that. I'm going to post that after we get off this link. So I haven't even publicly put that out yet. All right. So I just updated that in my Instagram. Let me go to my Twitter real fast, make sure that's updated for anybody interested. Does anybody else have questions? I don't see anything else here. Okay, no questions there. No questions there. Looks like we're safe.
I'm sorry. Where did you say you were going to post this? The Excel sheet that you show?
The free ones or the course?
The very first one that you were using and going through.
Oh yes, it's right here. It's in the chat box.
Oh, is it? Okay. Thank you.
Both are balance sheet and the free budget template are in there.
Okay. Awesome.
Yep. And like I said, guys, you guys might have to move it around and analyze or change it a little bit for your situation, but it's a good template to start for sure. All right, guys, it sounds like it's crickets over here, so I don't want to keep you guys too long. If anybody else has questions, obviously you guys can always reach out to me through my DMs on Discord, Instagram, Twitter, whatever, wherever I'm at. So happy to answer your questions. I'm pretty fast with it. Just a heads up, guys, get us. This is off topic a little bit, but we're in almost December now. Figure out your CPA and your tax situation for year end. I know that's not talked about often on Instagram and wealth building and stuff like that. But if you guys haven't figured out your tax situation for year end, that's very important to do. I do have CPAs available for you guys if you need one. Very reasonable price, but I always highly recommend somebody to get a CPA at least year one. If their situation doesn't change year two, that's fine. You can do your own taxes. But most times, I'd say 9 times out of 10, they save you money. So whatever you pay them, they usually find tax deductions to help you out and pay for that service. Usually they range from like 250 to 500, depending on the service, but you get what you pay for. Remember, so if you go to TurboTax, that's fine. It's a free service, but sometimes TurboTax doesn't inquire about everything that you possibly could, a good CPA could. So that's just a heads up as you guys are preparing for your end. I posted about cryptocurrency taxes today on my Instagram. It's a really good long thread that I'd advise you guys to read as well, to get prepared for that if you guys have cryptocurrency on your balance sheet. So other than that, guys, thank you for your time. Reach out whenever and go Well Squad. See you guys.
Thank you. Bye.
Thanks.